Your credit score is one of the first things lenders see when reviewing your application for a loan or other line of credit. It can also follow you for decades and significantly impact your financial life. For example, a high credit score can qualify you for better rates, lower insurance premiums, and make it easier to rent an apartment or get a job. Conversely, a low credit score can restrict your options and make it more expensive to borrow money, lease a car, or buy a home. Fortunately, there are many straightforward ways to improve your credit score. Keeping track of your credit report and getting in the habit of monitoring your credit regularly is the best first step. Beyond that, many simple practices will help build a healthy credit profile. Check your credit report. You should check your credit report for free at least once yearly at annualcreditreport.com. Checking your credit report will give you a general idea of how your credit is doing and help you find mistakes or wrong information that could lower your credit score. Credit reports are based on data from your credit accounts. Only some people who offer credit, like a credit card company or a mortgage lender, report your information to the credit bureaus, but most have at least one report on file. So if you want to see a snapshot of your credit profile, you should check your credit report. Some companies will offer to check your credit report for you and charge a fee, but there's no reason to pay for something you can get for free. Pay your bills on time. The most significant factor that affects your credit score is whether or not you pay your bills on time. Payments that are 30 days late or more are reported on your credit report as a default. Late payments stay on your credit report for 7 years from the date they were written. Paying your bills on time is the most important thing you can do for your credit score. If your account is late, it's more important to fix the payment than to dispute the report. Even if you have a late payment on your credit report, you can still improve your score. You'll need to focus on paying off the rest of your accounts promptly. Crossing one account off your credit report is not a magic bullet for improving your score, but it can help. Review and respond to your credit report. Examine each of your credit reports for inaccuracies or signs of fraud. If you find any mistakes, you have the right to dispute them and remove them from your statement. It's essential to act quickly because the credit bureaus have 30 days to review your dispute. If the credit bureaus don't respond within that time, you should contact the Consumer Financial Protection Bureau, CFPB. If you believe a creditor has incorrect information on your credit report, you can ask them to correct it. If they refuse, you can file a dispute with the credit bureaus. Again, the credit bureaus have 30 days to investigate the dispute and get back to you with a response. Don't apply for new credit unless you have to. Applying for new credit can ding your credit score. This only applies to new credit accounts. The credit bureaus don't care if you close an old version, and they don't care if you use it for a new report you plan to complete. Depending on the type of account, a credit inquiry can reduce your score by 5 to 25 points. This is a short-term effect. The score should rebound within a few months. Credit inquiries have a more significant impact on younger people with short credit histories. While there isn't an ironclad rule about how many queries are too many, there's no reason to apply for new credit unless you have a good reason to do so. Credit is essential. You should know what affects your credit score and how to improve it. Monitoring your credit and checking your report for errors will help you catch mistakes and make it easier to correct them. Your credit score is based on many factors. Therefore, keeping your credit healthy is essential to get the best rate on loans and credit cards.